Hi, this is Helmut from CQG in Frankfurt in Germany. Today we're going to talk about the Super Template I actually built in 2022, but we want to take the opportunity to get you a walkthrough on the actual platform, how this works. You find the Super Template in the links in case it's not installed on your PC already. Normally, if you install Integrated Client, it comes with the Super Template. We'll have a look on the CQG integrated client itself. So on this chart here, it's a US Treasury bond 60-minute chart, and the Super Template is already on. This is not supposed to be a trading idea. It is more the building ground for your own trading ideas. When you build a trading system from scratch, what we usually recommend to do, and where we have some documentations and webinars already on the platform, you always start like from zero. You go to the formula toolbox, you have to create your own trading system, you have to create your own trades. All the trades have exits, or you have to create multiple exits. And you're doing probably the same things over and over and over again. So the idea of the Super Template is to give you a starting point that has the most important exits that you would probably use. A couple of functionalities already built in so that you only have to alter the trading system. You change only the things you need to change. If you look in the code for the trading system itself, you will find the Super Template being based on a simple trading idea that an adaptive moving average is crossing above a normal standard moving average, a simple moving average. This is the initial signal that you can of course alter to anything else. Everything above the signal, all these functions here around timer and trading times per day, everything above that should stay in the system. So if you build your own trading system, the way to do this would be you're on the Super Template, you copy the Super Template over into your system. Let's for instance call it DMI system or DMI system 1. Click OK. So the trading system would totally be copied. All the entries, all the exits, everything is now in your own trading system. And I would only change the signals and the things I want to change here. Everything else, what was initially in the Super Template trading system, all the exits, the money management, number of contracts to be traded, trading times, everything that would travel automatically into your own trading system, and you can just reuse it here. Let's quickly talk about the features we have already built into the Super Template. So if you're on the trading system itself, your own trading system, or in this case, we're looking at the Super Template itself, you can right-click on any element of the trading system, on the trades itself or on the P&L curve, and you go to modify Super 2022, and you get a huge list of parameters we created. The standard trading system parameters you already know, like the time range, how many bars back you would look for the trading system, the display methods, like how you want to show the trades, the stats, and so on and so forth are still on the same place. Nothing has changed here. The first parameters, the first 1 to 3, you can see here from the naming, are the settings of the actual adaptive moving average we're using in the Super Template, and the next row is the setting of the standard moving average we're using. All the other parameters are coming from different functionalities we have built in. This is like best of the requests we are getting over time. So one of the common requests is, oh, can I have a trading system that automatically exits at end of day? I don't want to hold an overnight position. So we built that exit already into the trading system. And just with a checkbox on and off EOD for end of trade, you can check it and it would exit at the last bar of the day, for example. Just with click on and off, and if you hit apply, it would take that changes to the trading system. It will recalculate the trading system. You get immediately the results with a new setting. with the end of day exit turned on. Now the same is true for the money management stop. This is your classic stop loss. So you define the amount you're willing to risk per trade. In this case, we put it, for example, on $9,000, and you check the on-off for the money management stop. And if you hit apply, it would use that exit as well. Apparently, with 9,000 stop loss, we killed some actually good trades. So you see the result of the trading system turns negative. So you think like, oh, okay, maybe the stop must be higher, or you just turn it off here again and hit apply, and it goes back to the original position. The next one is called break-even floor, or the exit's actually called break-even. Again, checkbox whether you want to use it or not. This exit is designed that you enter a trade. This trade goes into a positive, it's making money, but then maybe the market reacts, and you want to exit this trade before you're losing money on the trade. So it would exit you right at the entry point or at the price of the entry point. But in order to do so, it needs another number called break even. So you, in fact, if you enter a trade and it would go up 5 ticks, and then it would kind of, with the noise, go down 5 ticks, it would be break even all the time. So you need to reach that floor, that amount of money first, before that exit gets turned on. So you check the box for break even if you want to use that. You define the amount this trade needs to reach before the break even floor gets automatically activated. Dollar risk trailing is the same principle. It's basically a stop, but it's a trailing stop. So if the market goes in your favor, with every close of every bar, it counts the money you already made in the trade, and it lifts the stop to that amount. Initially, it's like the same as the money management stop. You can put a value to it, and if the trade is going to be positive, it will follow up. I can see that graphically here with that trade. For example, we go along here. It puts the initial stop $9,000 below the entry bar, and with every closing price, we're actually making money. The stop, it's getting higher and higher and higher. Classic dollar risk trailing stop. Already built in, you just need to check it whether you want to use it or not. The same exists for percent risk trailing stop. It has 3 parameters here. Again, turn it on or off if you like it. The percentage you want to risk for the trailing. So if your trade made $3,000 and you're risking 50%, the stop would be $1,500 below that with a 50% rate. The more money you made, if you make $10,000 with the trading system, the stop will all of a sudden be $5,000 underneath. So the more money you make, the more the stop actually widens. You have more room for error if you want. So it's getting more relaxed percent risk trailing. Profit target, what every trading book tells you not to use, but in fact we're seeing that a lot of times, that you use profit targets. You enter a trade, and if your trade makes a certain amount of money, you want to get out of the trade and take the money. Profit target, again, the value where you want to cash in, and just check the box if you want to use it or not. The ATR stop is the classical, often referred as the turtle stop. How many ATRs, average true range values from the entry price you want to place your stop. The original turtle was, I think, 2 ATRs, which is our default here as well. Again, if you want to use that kind of stop, you need to turn it on. You have the period of the actual ATR measurement, whether you want to have that calculate by 10 bars or a larger number of bars. You can set those up here and just check the box if you want to use it. Again, if we hit apply, it would recalculate the trading system with a way with using the ATR. Entry stop is a classic, very often asked. So you enter the market on one particular bar, and let's say you're entering the long trade. It uses the low of that bar as your initial stop. If you're entering a short trade, it would use the high of that bar as your initial stop. There's no parameter that goes with it. You can just check the box if you want to use that kind of stop or you don't want to use it. One of the things we have built in is the quantity, how much contracts you want to trade, because different commodities have different tick sizes, and you want to maybe trade 5 mini S&Ps, but here on US Treasury bond you can risk higher number of contracts, 25, so you can control that from outside how many contracts you want to trade. And I also added a box to it if you trade FX. For the back testing, it's more for the back testing, not so much for the auto trading. But if you trade FX, it multiplies your quantity by 100,000. So normally you would not trade $25 versus euro. You would trade, let's say, $1 million versus euro. So that would be 10 times 100,000 if you check the FX box. Of course, don't check it at futures. That would be that would be a couple of thousand contracts in that case. Very often requested by customers. The data on most exchanges these days is almost 24 hours a day. Most exchanges trade very, very long trading hours. And the traders want to limit the time from where to where the trading system would be active. So you can control this by saying, okay, I only want the trading system to accept trades, let's say between 8 o'clock in the morning and 1800 in the evening. So you can just set the start and end time. And of course, if you have a trade on at 6 o'clock at 1800 in the evening, you also may want to exit that trade at that time. If you have one on, if you don't have a trade on, it doesn't matter. But in case you have a trade on, you can set this as well as the exit time. It's all predefined. You don't have to think about how would I program this or not. And the only thing, the exit time needs to be checked whether you want to use that functionality or not. We're almost at the end of the parameters. There's two sets left. There's max per day. It is how many trades a trading system is allowed to do. So if you have something that's always going long and short, like following a moving average, for example, and sometimes traders want a restriction that it only trades like 3 or 4 times a day, and it's not constantly keep trading. So you can specify the number of trades you allow the trading system to do per trade. Per day, of course. The default is set to 999 so that it always trades. And if you want to limit it, you can do that here. Some of the code that's in there would not work if you run your trading system on a daily or on a weekly chart. So we have this little box here at the end. Whether you use intraday charts, by default it's set on. Most people probably use intraday charts for their trading systems. If you run your trading system on a daily chart, you need to uncheck that box and it would work. These are all the built-in things, and I can tell you it would be a lot of things to code if you want to do that over and over and over again for your own trading system. So let's go back to the example we did in the Formula Toolbox. So we go to Formula Toolbox, we use the Super Template, we use to copy, make a copy of the trading system called a DMI system. So in that case, I leave everything as it is, just the initial signal should change. So I would delete the original signal from here, and then I'm going to add my own signal here. I'm looking for studies. I'm looking for the directional movement index. So the studies are in alphabetically orders. So I'm looking for directional movement index. And actually I'm looking for directional movement index differential. So that's the difference between the two DMI lines. And I can insert that. And I would say I would go long if that crosses above a level of 5. So that would be a number, ddiff would be a number that circulates around 0. So if that goes positive, I wouldn't use the 0. I would use something like 3, 4, 5, maybe 10. If that crosses above the 5 level, I would trade long. I just copy that. And for the short trade, it's the same thing. I remove the adaptive moving average, the initial idea of the trading of the old Super Template trading system. I substitute it by my direction movement index differential, and for the short trade it would be if it crosses below -5. That would be my trade. The exits are the same principle. The first exit always in the super template is the opposite of the entry, basically. So again, we need to remove the adaptive moving average. I use copy and paste to paste in the DDIF, direction movement index differential, and for the short we want to get out of the trade if it crosses back above +5, which is also the entry for the long trade. And then we go to the long trade as well. We look for the exits called real exit. We remove the piece of coding and change it into x below -5. So we use everything that's already been discussed in the super template. We use everything that's there in our super template, but we're using a different signal for the initial trade. Of course, I can make that now a little bit nicer. I can have the length of the direction movement index differential as being a parameter for changing it from outside for optimizing. I can make the 5 or the -5 also like a parameter to optimize it. Just for the shortcut for now, I leave it as it is. I switch on the toolbox for this, the toolbar button for this, and I would have the DMI trading system here on the left-hand side. So closing the formula toolbox, and here on the left-hand side, I have my DMI trading system on. Just with the left mouse click, it would put the trading system on the chart. Here it goes. I don't need the super template anymore, so I can right-click on the P&L of the super template and remove it from my chart, and I can see how we were doing with my newly built trading system. Instead of now going into the formula toolbox and add all the different exits and the money management and the different functionality and trading hours, I don't have to add this over and over again. It's already in there. So I can right click here, go modify DMI system, and everything we just discussed for the super template for the first trading system, it's already in here and we can use it. We just need to clean up the parameters. There's no ER period in, so we need to make that a little bit nicer to have a good starting point here on the DMI trading system. On this way, from the super template to a couple of extra trading systems, we have a link on the website. Again, the super template, we will link that in the article. There's a little information about that, how you do it, everything we've discussed here. And we also have a link where we created 8 standardized trading systems based on the super template. So the first one, of course, was the adaptive moving average trading system. Then we created a copy of that using exponential moving averages and smooth moving average instead. That's trading system number 2, number 3. I created the same principle for the MACD, using MACD as the trigger signal. We did one based on RSI. We did one based on slow stochastic. And we did one that's actually a little bit different than the other 6 before. We created one trading system on parabolics, and it actually trades not as the event when the parabolics change from upper to lower parabolics. We're actually trading as a stop order on the price of the parabolic. So this is also a good example if you want to look into a trading system and to re-engineer it. You can see very easily how this is done. The logic of the parabolics will go into the price field of the trading system. But everything is pretty well explained here. Last but not least, we have this volatility stop calculation on our CQG integrated client, and we're using that volatility stop also as a trading system. And all these 8 trading systems will come with all these functionalities, with limiting trading hours, limiting numbers of trade, and all the variety of different exits. You can download that at the end of the article. Download the pack, install it on your CQG integrated client, and you'll have, of course, a super template on it, and you will have these 8 trading systems for reference also on your CQG. In order to change them around, you can use them if you want to, or make your own trading system based on these systems. I hope that helps you getting started on CQG backtesting. It's a little bit of a shortcut. We still recommend taking your time, going through the programming language, understanding the functions, and taking a little bit of time learning the programming language. But if you need a quick start, this is probably a good shortcut to get started into the world of backtesting and auto trading with CQG. Thanks for your attention.